going for a minute to put to one side the exact detail of the question and take the opportunity of reminding you of the technical area that we are being examined on. We are selling shares in a sub. 1 month prior to the reporting period, we sell some shares in the sub. Now, there are two totally different scenarios. Now, one scenario is that there's a loss of control. Now, let me change the numbers slightly. I have 90%, I sell 80%, and therefore I'm left with 10%. And that clearly is an example where we've lost control. Now, if we've lost control, so many things, so many consequences occur. Yeah, it's no longer a sub. So you de-recognise the net assets, de-recognise the goodwill, de-recognise the NCI, bring in the residual value, yeah, consolidate up to the date of disposal, and there will be a profit or loss on the disposal. It's a radical change. So if there is a loss of control, yeah, it is no longer a sub. So we cease acquisition accounting. We consolidate up to date of disposal. We consolidate up to date of disposal. We de-recognise the goodwill, we de-recognise the net assets, we de-recognise the NCI, and there will be a profit or loss to the group. Because when you are disposing of a subsidiary, yeah, you're selling it. Now, that's a very important, as soon as I know I've lost control, there's a box that I open up, there's a file that I open up. It's no longer a sub, you cease acquisition accounting, you time a portion in the group profit and loss account, you de-recognise the goodwill, de-recognise the net assets, de-recognise the NCI, cleanse the account, cleanse the balance sheet, and then you've got a profit or loss arising to the group. Now that profit or loss you can work out in terms of a pro forma. So it's your proceeds, this is your cash in, yeah, your proceeds, this is your cash in, so you debited cash and that's a credit. Then you would de-recognise all of your net assets, you would de-recognise all of your goodwill, your unimpaired goodwill at the disposal date, you would de-recognise your NCI, only your NCI is a credit balance so it appears as a plus, but strictly speaking you are de-recognising all of these, and then you would bring in the residual, and you would bring in the residual, and that would be measured at fair value, and that would give you the profit to the group. So in the group accounts, it would be a profit. If, of course, that number was a negative, it would be a loss. Rich source of marks. Rich source of marks. That is what happens if it is a loss of control. That is what happens if it is a loss of control. So if it is a loss of control, then the terminology you can easily also use is disposal. Yeah? So this is what's happening when there is a disposal of a sub. What's the other situation? Because perhaps instead of selling 80% of the sub, what would happen if we only sold 10%? If we were selling 10%, we would then still be left with 80%. that would not be a loss of control. What would that be? Yeah, it would be control to control. That's how it can be called. It would be a change in the NCI. So, if control is maintained, so 90% minus 10% should still leave you in control. So this is sometimes referred to as a control to control scenario, or sometimes you could refer to it as an increase in the NCI. Technically, it's very boring. Because technically, it was a sub, it's still a sub, so no change to the goodwill, you continue to consolidate, everything's the same. Everything is the same. What is more, you are transacting with the NCI. Although we're selling them a slice of the business, they are the NCI. So we are transacting with our own brother and sister. The NCI is part of group equity. The NCI is part of group equity. It's within the group equity. And so when we are transacting with our own NCI, that is effectively, means that there'll be no group profit or loss. So there's a load of theory here. It remains a sub. There is no change to goodwill. It is a transaction between the parent and the NCI, and therefore within group equity. It remains a sub, there's no change to the goodwill. It's a transaction between the parent and the NCI. It is therefore within group equity. And therefore there is no group profit or loss arising. But there is a difference that goes direct to equity. There is a difference that goes direct to equity. This takes a bit of explaining. I have seen the examiner ask this in the exam in writing. I've seen it in numbers many times, but I've also seen it in writing. So you could have to explain this, like I've set out here. Yeah? Control to control, remains a sub, it's not that significant, there's no change to the goodwill, it's a transaction between the parent and the NCI, so it's within group equity, there's no group profit loss arising, but we get this difference that goes to equity. So if we have an increase in the NCI, then there will be a difference that goes to equity, and the difference that goes to equity will be based around the cash that comes in, the proceeds. The cash that comes in, effectively the proceeds. Now, again, effectively that's a credit, because you've debited cash, credit here. You're selling them a slice. So it's the percentage of the net assets and the full goodwill. And this difference then goes to reserves. Yeah? This is the increase in the NCI. This is the increase in the NCI. And that is the difference that goes to reserves. So we're selling them 10% of the net assets and the full goodwill. So I don't know, if the cash is 20 and this is 18, then you've got a net credit, looks like a profit, that will be a positive in the reserves. Yeah? So if your cash was 20 and your 10% was 18, it would look like you've made a profit. You'd be left with a credit balance that will be a positive experience, and you would take that too and add it on to other components of equity. So this is a posting to NCI, and this is a posting to other components of equity. I will go back to the original question in a minute, but I'm so close that I may as well finish off. This is what happens when you increase the NCI. Almost identically, the same thing happens when you decrease the NCI. If you decrease the NCI, control is maintained. If you buy them out, if you have 90 and then you buy another 10, you're decreasing the NCI. Still remain a sub, no change, all this is exactly the same. But if you decrease the NCI, then there is also a difference. When there is a decrease in the NCI, so when there's a decrease in the NCI, there's also the cash. But is that cash in or cash out? Cash out, yeah, that's cash out. So that's in the nature of an investment. And that's going to be your debit. And then you've got a fraction of the NCI balance. That is your decrease in the NCI. So you have a fraction of your NCI balance that is your decrease in the NCI, and that's the difference that you take to reserves. That's the difference that you take to reserves, and that's the difference that goes to other components of equity. Right, I got carried away there, I got excited there, but really important to me. And if this is revision, this is going to come in handy tomorrow. Yeah, this is going to come in handy tomorrow. This is going to come in handy this afternoon, because we're going to do some numbers. Right, back I go, because I still haven't properly answered the question that was put to us in the context of page 34, ABC.